Want to know the top dividend stocks for this year? Well, you're in the right place. Dividend stocks are shares in companies that pay out a portion of their earnings to shareholders, a solid way to get a return on investment. They're important for investors who want a reliable income stream and potential for growth. Today, we're going to delve into different sectors, exploring some of the best dividend-paying stocks in each. By the end of this video, you'll have a robust list of top dividend stocks to consider for your investment strategy. First up, let's delve into the technology sector. In recent years, the technology sector has been a hotbed for growth and innovation, transforming not just our daily lives, but also the investment landscape. Yet, amidst the flashy startups and skyrocketing market caps, there lies a subset of tech companies that consistently reward their shareholders with handsome dividends. Take, for instance, the renowned tech giant, Apple. Known for its innovative products, Apple has a history of providing steady dividends. Over the past 5 years, Apple's dividend yield has averaged around 2%. This may not seem like a lot, but when coupled with Apple's potential for stock price appreciation, it's a clear winner for those seeking a blend of growth and income. Next, we have Microsoft, another titan in the tech industry. Microsoft's history of dividend payments is impressive, with a track record of increasing its dividends every year over the last decade. The company's dividend yield has hovered around 1.5% in recent years. With its robust portfolio of software and cloud services, Microsoft is poised for continued growth, making it another attractive pick for dividend investors. Then there's IBM, a stalwart in the technology sector known for its high dividend yield. Despite a challenging business environment, IBM has managed to maintain a dividend yield of around 4% over the past 5 years. While IBM's growth prospects might not be as rosy as some of its tech counterparts, its high dividend yield makes it a compelling choice for income-focused investors. Lastly, let's not forget about Cisco Systems. The networking hardware company has a robust history of dividend payments, with a yield that has averaged around 3% in recent years. As the digital transformation trend continues to gain momentum, Cisco's role in enabling connectivity positions it well for future growth. So, there you have it. Whether you're looking for growth, income, or a bit of both, the technology sector is home to a variety of dividend-paying stocks that can cater to your investment needs. These tech stocks offer promising dividends and a strong potential for growth. Now, let's turn our attention to the healthcare sector. The healthcare sector is a crucial part of our economy, and it's also a haven for dividend investors. This sector is known for its resilience and stability, even during economic downturns. It's a sector that's always in demand, and that can be a great advantage for investors looking for reliable dividends. Let's start with Johnson & Johnson, a diversified healthcare giant with a long history of dividends. For over 50 years, Johnson & Johnson has increased its dividends annually, which is an impressive track record. Its current yield stands at around 2.5%, making it a solid choice for dividend investors. Next on our list is Pfizer, a pharmaceutical powerhouse. Pfizer has a long history of paying dividends, and its current yield is over 3%. With its strong portfolio of products and a robust pipeline of new drugs, Pfizer is well-positioned for future growth. Then we have Medtronic, a leading medical device company. Medtronic has a consistent record of dividend payouts and has been increasing its dividends for over 40 years. The company currently offers a yield of around 2%. With its innovative product line and strong market presence, Medtronic offers both growth and income potential. Lastly, we'll look at AbbVie, a biopharmaceutical company known for its high-yielding dividend. AbbVie has a current yield of around 4%, one of the highest in the healthcare sector. The company has a strong lineup of drugs and a robust research and development pipeline, which bodes well for its future growth. These are just a few examples of the numerous dividend-paying healthcare stocks available to investors. These companies provide essential products and services, making them less susceptible to market fluctuations. This, coupled with their strong dividend history and potential for growth, make them attractive options for investors seeking both income and stability. These healthcare stocks provide both stability and attractive dividends. Moving on, let's explore the consumer goods sector. This sector is known for its resilience and consistency, a haven for those seeking reliable returns. Our first stop is Procter & Gamble, a multinational consumer goods corporation. A staple in many households, Procter & Gamble has a broad portfolio of products ranging from beauty and grooming to health and wellness. The company has seen steady growth over the past decade and has a solid track record of paying dividends. In fact, they've been paying dividends for over a century and have increased them annually for more than 6 decades. With a current yield hovering around 3%, Procter & Gamble is a testament to stability and growth. Next, we have the Coca-Cola Company, a global beverage leader. Coca-Cola has quenched thirsts worldwide for over a century and has a long-standing tradition of paying dividends. The company has increased its dividend annually for nearly 6 decades, boasting a current yield of around 3.2%. Coca-Cola's wide distribution network and strong brand recognition make it a resilient player in the consumer goods sector. Lastly, let's turn our attention to Kimberly-Clark, the company behind household names like Huggies, Kleenex, and Cottonelle. Kimberly-Clark has a rich history of dividend payments, with consecutive dividends paid since 1935. The company has increased its dividend annually for nearly 5 decades, offering a current yield of around 3.5%. Kimberly-Clark's diverse portfolio of essential consumer products ensures a steady demand, making it a promising prospect for dividend investors. Each of these companies, with their strong brand recognition, wide distribution networks, and consistent dividend payments, offer attractive opportunities for investors seeking steady income with potential for growth. It's worth noting that while these stocks provide reliable dividends, it's crucial to consider the overall health and future prospects of the company. These consumer goods stocks combine steady dividends with potential for appreciation. Next, we'll take a look at the financial sector. This sector is often overlooked when it comes to dividend stocks, but it is a gold mine for savvy investors. Let's delve into a few standouts that have consistently offered robust dividends and have strong potential for growth. First up is JP Chase, a giant in the banking industry. Over the past few years, JP Chase has shown a consistent increase in dividends, with an impressive yield hovering around 3%. The company's ability to maintain a solid dividend payout, coupled with its robust financial performance, makes it a top contender in the financial sector. Next on the list is Wells Fargo. Despite a few setbacks in recent years, the company has been making a strong comeback. Wells Fargo's dividend yield has consistently been above 4%, which is quite an attractive figure for dividend investors. With ongoing restructuring and a renewed focus on core banking operations, Wells Fargo is poised for growth, making it a potential gem for dividend investors. Third, we have American Express. Known for its credit card and charge card services, American Express boasts a dividend yield of around 1.6%. While this might seem low compared to the others, what sets American Express apart is its consistent dividend growth. Over the past decade, the company has increased its dividend payout at an average rate of 10% per year. Lastly, we have Goldman Sachs. This investment banking behemoth offers a dividend yield of around 2.4%. Goldman Sachs has shown a steady increase in dividends over the years, and with its diverse portfolio of financial services, it shows great potential for future growth. Remember, while these stocks have a track record of strong dividends, it's always important to do your own research and consider your own financial goals before investing. These financial stocks offer robust dividends and a strong potential for growth. They're worth considering if you're looking for steady income and potential appreciation in your investment portfolio. We've covered a lot of ground today, discussing the top dividend stocks across various sectors. From technology to healthcare, consumer goods to the financial sector, we've seen a range of promising stocks that are not only yielding attractive dividends, but also hold potential for substantial growth. In the tech arena, we've discussed companies that are leading the pack, showcasing not only robust dividend payouts, but also a solid track record of consistent growth. The healthcare sector, too, has its share of high-yielding dividend stocks, backed by a resilient industry that's always in demand. We've also delved into the consumer goods sector, where we've seen some stable, well-established companies that have been regularly paying out dividends, indicating strong financial health and consumer confidence. And in the financial sector, we've highlighted some stocks that are yielding high dividends, supported by a robust banking and finance industry. The key takeaway here is the importance of diversity in your investment portfolio. By spreading your investments across various sectors, you're not only broadening your exposure to different industries, but also cushioning your portfolio against potential downturns in any one sector. Remember, investing in dividend stocks is a long-term strategy. Build a diverse portfolio and enjoy the reward of regular income and potential growth. Until next time, stay invested.